how to reward honest, sincere and hard-working employees who have directly contributed for the profitability of the organization is a big issue. And I was telling you the traditional methods of giving increment or promotion and some kind of incentives have already failed. This is the issue before us. Probably an answer you will find in the sweat equity shares. Let us start. Example 1. Let us say Narayan Murthy of Infosys Limited got a project to develop a software package. What he did, Narayan Murthy, out of 30,000 employees, what Narayan Murthy did was, let us say, he selected a team of 5 people out of 30,000. 5 people he selected and said, you please take 1 year to develop this software. Fine. For 1 year, how much Narayan Murthy would have spent on these people for salaries? And let us say each gets a salary of say about 1.5 lakhs per month. 5 people, 7.5 lakhs, say about 90 lakhs per year. Then perquisites and other things for them. Say all put together, how much Narayan Murthy would have spent on all these people? Say 2 crores. So for 1 year, he spent 2 crores on them. And at the end of the year, the software is ready. Excellent. Now this software belongs to whom? Not to the 10 employees. This software along with the source code belongs to Narayan Murthy, belongs to Infosys Limited. Clear? They belong to Infosys Limited. Excellent. So yes, how much spent? Say around 2 crores on all these 10 employees. Direct and indirect expenditure. Now the issue is, what is the worth of this software in the open market today? Let us say it is 10 crores. In other words, if Infosys sells this software in the open market, they will get how much? Definitely 10 crores. So now these 10 employees have directly contributed for the excellence and profitability of the organization. Clear? They have spent only 2 crores, but now it is worth 10 crores. Now, listen. Narayan Murthy says, I'm not that, Narayan Murthy wants to reward these 10 people. That is the issue today. So I have already told you the traditional methods of promotion, increment, all that will fail. So now, what shall I do? How to reward these 10 people? The answer is sweat equity shares. Listen carefully. Do one thing. First, you call these 10 people and give shares. They are free shares. They are not, you don't call it as free shares. So sweat equity share, what is sweat equity share? Sweat equity shares is given to the employees or directors at a discount or for consideration other than cash for providing know-how. What is that know-how? Technical know-how are available in the nature of intellectual property rights. What is intellectual property rights? Patent, trademarks, copyrights, software, brands, marketing rights, like that. Or value additions by whatever name called. Clear? So, very good. So, what Narayan Murthy says, do one thing, you issue shares to these people, say 10 rupee per share. So, totally how much? About 10 lakh shares we will give it to them, say 10 rupees per share for 1 crore. And though they are getting it almost free or at a discounted price, but what entry they will pass? Software account data to equity shares account. So they will capitalize this expenditure. In other words, as if these 10 employees have given the software to us. So what Narayan Murthy will do? The 2 crores which they have spent on their salaries and all, they will capitalize it. Software account data to bank account. And now this 1 crore which they issue as sweat equity shares to them, that also they will capitalize it. So what entry they will pass? Software account data to equity share capital. Over. Second issue, confidentialness in issuing sweat equity shares. Other employees will not come to know. It is only the board of directors or the company secretary or the top management will know to whom we have issued. So the moral motivation of other employees being affected will not be there. Confidentiality. Then third advantage. At present there is no outflow of cash. We are not spending 1 crore rupees and giving to all these 10 employees. We are just allotting shares and entry only is passed in the books. Only the printing cost of the share certificate, that's it. There is no outflow of cash. Then fourth one, it may be given at the discount. For example, 10 rupees share, they may give it at 5 rupees. Are you getting it? So in other words, instead of giving 10 lakh shares, you may give 20 lakh shares of 10 rupees each, but at discounted price of 5 rupees. So what is the advantage to them? They get on par value 2 crores worth of shares. And the last important story is, now because of the software, the company will earn lot of income. That software will be used. As a result, it will contribute for the turnover. It will contribute for the profitability. Because of the use of that software, now the profitability will increase. When the profitability increases, obviously the market value of shares also will increase. Now see, suppose the 10 rupee share is quoting at 30 rupees in the market. My God, look at the value. They gave it a discount of 5 rupees. So the par value itself is 1 crore shares was 2 crores. And the market value is now 30 rupees, then 2 crores will be worth in the market how much? 6 crores. The more the best software you have prepared, it has contributed for the profitability, the more you get. There is no limitation. On the other hand, if you have supplied a useless software which has literally has not added to the turnover, that's it. Your share value also come down. I am sorry to say the share certificate is nothing but a piece of paper in your hands. You get the point here? So directly I am going to recognize him. The answer is sweat equity shares. The answer is sweat equity shares. You get it? I'll give you another example. Say example 2. In the morning in the yesterday's class I was telling you that suppose now let us say all the best faculties are going to start a coaching center. Say something like Spellbound Center for Professional Studies Limited. Fine. There is huge profitability. We want to create a wonderful infrastructure, say for coaching. Right. Now, I am also one of the faculty. Now, I will not come for a salary. I will not come on per hour basis. Are you getting it? I will not come for all this. So, and my material, I am going to give it to them. So, what is the answer? I will transfer. They will issue sweat equity shares worth 2 crores to me, worth 1 crore to me. Look how you students are looking at me. One example only here. No one is going to give me that money. You got it? Answer is sweat equity shares. You get it? The answer is sweat equity shares. Now, for example, let us say this Republic TV, that Arnab. You mean to say Arnab will be given salary? I understand he is given salary also in lakhs of rupees. Apart from that, he will not come. Because of him, some crores of rupees profitability is earned. Because of him only. So what they will do? Royalty account data or some asset they will debit and give sweat equity shares to him. Are you getting it? That's it. That is the solution today. Now another example, my brother, my next brother, he developed a hotel package. And that's called Max software, which is used by most of the hotels in India. After Tata's, his software, Max software, is the best software. He developed that software. Now, about 1 year back, 1 year back, a marketing company came to him and said, "Sir, please sell that software to us. We'll pay you 1 crore. I said, don't sell it. It's worth much more than that. Why will he pay 1 crore? Because the earning capacity, using that software, he will earn more money returns. I said, it's worth it. You'll not believe, within 6 months, another marketing company came and told him, we'll pay 10 crores. My God, where is 1 crore? Where is 10 crores? But that company was very smart. They said, we will give you sweat equity shares. Now you got the point? Working director. They said you also become a director. They'll give 10 crores. They'll give shares, even at a discount. Now by giving the shares, what is the advantage? There's no outflow of money. And tomorrow, when my brother has supplied that software, using that software, if they are able to sell and service that software in a very big way, they will earn huge profit. Are you getting it? Then my brother may get not just 10 crores. In terms of market value of shares, it might touch 20 or even 30 crores. On the other hand, whatever software he has supplied is not worth it, and they could not make any profitability. It is just a waste paper in his hands. That's it. Today's sweat equity shares play a very important role. It is all for scientists and other people who have developed new products. For startups, sweat equity is a great advantage. I think we have spent quite a lot of time trying to understand. So start to whom they are nothing but equity shares only. They are not separate category of shares. They are only equity shares, but whom they are given, not to all, to the employees and to directors, working directors of the company at a discount. So 10 rupees share they can give at 5 rupees, 7 rupees, 8 rupees, or for consideration other than cash, for supply of know-how. So I already explained, they supply know-how, technical know-how, marketing know-how, some kind of know-how, or providing rights in the nature of intellectual property rights. As I told you, trademark, software, brands, marketing rights. These intellectual properties, these are of new origin. Then by value additions by whatever name called. This is sweat equity shares.